I'm getting out on the bike on Sunday, June 25th. Beautiful, beautiful day, just northwest of Oakville. And it's good to get away from the screens. I always say you should go for a ride when you can on the weekend. If you can't ride, run. If you can't run, walk. Just get away from the screens, get outside and get some fresh air. And it's beautiful out here in the country. This last week was light on economic news, but we did see a couple things come out. First of all, on the earnings front, we saw FedEx come out with disappointing earnings and as well a weak outlook. So a lot of people look at companies like FedEx that move parcels around as a bellwether for the economy. We've seen the transportation package delivery business actually really sliding here. There's a number of different metrics on that. If we take a look at the Cass Freight Index, we can see that it's come down sharply recently as the S&P 500 has moved higher. There's a correlation between the two, but we've seen that sharp drop. Now, some people will say, well, we've shifted to a services economy. Yes, I agree. A lot of people have shifted their spending, but this has been a sharp drop recently for this to take place. And if the spending was shifting, we wouldn't see quite the same sharp drop that we've seen recently. There's a whole set of other indicators pointing to the same type of reduced shipments at this time right now. But on the positive side, we saw new starts for homeowners, for home starts come out last week. It came in at 1.6 million, a huge number. The expectation was 1.4 million. Now this is the one sector of the economy that's showing strength that is a little bit like out of whack. We're seeing so many soft surveys, whether it's the PMIs, etc., really showing economic weakness. But yet the housing market has, at least from the build side, has really taken off. And they've outperformed since last April. If we're using the ETF in the US, ITB, compared to the S&P 500. But we have to watch out on the actual sales side for housing. Overall, if we use the Case-Shiller 20 Home Index in the States, we can see that housing has come off since last year, and we're seeing a little bit of a rebound in housing. But if we put that in the big perspective, it's not very much at all, really. And if mortgage rates stay high, we will probably continue our downward path, I think, for housing prices overall. I mean, last year I did write a piece in March in 2022 called "Ringing the Bell on the Housing Market, a Letter to My Children." And since then, we have seen housing prices slide. We might see a little bit of a relief rally here right now. That's totally possible, but probably the overall trend is downwards. Now, so why are home builders so optimistic on the economy with the number of starts that they're doing right now? Well, first of all, there are a couple of contributing factors. Their costs have come down, at least on the commodity side. You've seen lumber fall dramatically since really early last year, and we're back down to pre-pandemic levels. So this is a positive for home builders, lower costs from that perspective. Copper really has pulled back recently as well, and although it's still high relative to pre-pandemic, it has pulled back. Also as well, I think there's just been a lot of commitments from the home builder side to keep building here. But when we do see the home builders roll over relative to the S&P 500 after this spectacular run, they're close to all-time highs here. If we do see that happening, then if that's the case, that probably is a good indication that the market is starting to roll over in a big way. That hasn't happened yet. Home builders can keep going here, of course, and they've had this strong run for over a year relative to the S&P 500. We saw Fed Powell last week and his speeches. So the previous week, we saw the Federal Reserve pause. But last week, Fed Powell said, I never use the word pause, and I'm not going to use it here today either in his testimony on Capitol Hill. So he came out more hawkish than expected for most. I expect him to come out hawkish as well. But anyhow, he came out more hawkish. And you saw the futures market for the Fed funds rate actually tick higher on that as well. So last week we ended up with the expected probability of the July hike at 72%. So another 25 basis point hike. And that in comparison to a month ago was at 50%. So we have seen the markets respond, at least the futures markets, for expectations for that. So it'll be interesting to see what happens. Powell is giving a couple speeches this week as well. This road's a little busy here. We have to make it by the roundabout coming up, and it starts to get a little quieter as well, which would be good. But so yeah, I think Powell's going to keep up his message that he's going to fight inflation. And the Federal Reserve wasn't the only central bank last week that came out with their commitment to fighting inflation. You saw Switzerland raise their rates, you saw Norway raise their rates, you saw Turkey raise their rates, and you saw the Bank of England raise their rates as well to 5%. Now they raised their rates 50 basis points. 50. 0.5%. The expectation was for 25 basis points. So that was a little bit of a surprise. So we're really seeing the central banks really fighting inflation here. We've seen Canada come off a pause recently. We saw Australia come off of a pause as well. So everybody's looking at some of the economic indicators and saying, well, the economy is starting to slow down. The central banks are saying, well, we're going to keep hiking until. Unfortunately, there were some technical problems with the second half of the video. So when I got home, I thought I'd film the second half of the video in my backyard here and just finish it up. Last week, if we look at the sectors of the market, the major sectors of the S&P 500, they were all negative except for the healthcare sector. If we look at the S&P 500, it's down 1.4%. We saw the healthcare sector, which was the only positive major sector last week. It was slightly positive. Consumer staples was slightly negative. Interestingly enough, though, we saw the utility sector a negative in a big way and underperformed the S&P 500. So we're not getting strong indications that investors are flowing into the defensive sectors at this point. We saw most of the other sectors perform poorly. The real estate sector, the REIT sector in the U.S. was down almost 4% last week. The technology sector underperformed the S&P 500. The cyclical sectors were generally underperforming as well. So we didn't get a lot of information coming out of the relative sectors in the market last week. Thank you very much for joining me today.